So if you just bought 1 million shares of Expolank at 6 rupees, 6 million, and we saw this share going to 400 rupees, right? So 1 million shares if you bought, you will have 400 million. So that's what we say, stock market gives you opportunity to change your life and take it to a massive level of living standards. So that is where I see as a stock market. The people who had invested in the value stocks made a thumping amount of money. So at this moment, what happens? A lot of investors panic and sell their shares, value shares. So if you look at the proper valuations and buy good shares at the right price, having the proper risk and reward dilution, you will be able to make a lot of money.
Have you seen this kind of a drop before in the market, or is this the first time?
Yes, I have seen. We saw when bombs were also going on, right? When we get to know a bomb went on in Maradana or somewhere, at that very moment, stock market crashes down. And investors say, sell my stocks, sell my stocks, sell my stocks, right? So they sell. So this particular client had made 3 billion rupees purchase and sold at 6 billion, a massive thumping amount of money they have made. So like this, there are ups and downs in the market.
Welcome to MasterMind YouTube channel. So today we are going to talk about how to invest in stock market. So we have Mr. Roshan today to speak about this. So Mr. Roshan, to start off with, can you tell us what is your view in investing stock market?
Yes. So investing stock market I see as a life-changing investment opportunity. In simple terms, if I take an example and explain, we saw a stock called Expolank. This Expolank share was trading around 6 rupees for many years. So if you just bought 1 million shares of Expolank at 6 rupees, 6 million, and we saw this share going to 400 rupees, right? So 1 million shares if you bought, you will have 400 million. So that's what we say, stock market gives you opportunity to change your life and take it to a massive level of living standards. So that is where I see as a stock market. So number two, I can say, Warren Buffett says, stock market can be a mechanism where transferring money from the impatient to the patient. So what does it mean? Stock markets always there is ups and downs. Especially we see when there is political uncertainty or economic uncertainty where inflation is rising and political uncertainty is happening, we see stock markets could crash. So at this moment, what happens? A lot of investors panic and sell their shares, value shares. So if you look at the proper valuations and buy good shares at the right price, having the proper risk and reward dilution, you will be able to make a lot of money. And the third one I can say that the stock market gives entrepreneurs to raise finance as well. So if you have a very valuable business, you can list it in the stock market and also raise capital.
So with this experience of yours, have you seen this kind of a drop before in the market, or is this the first time?
Yeah, so especially for these newcomers, when they see this kind of drops, they go crazy. First, I'll start with that. You would have seen in the month of April, you saw, and as soon as this political uncertainty in the country happened, the stock market, we had opened not even for 1 minute, it crashes, hit the trigger point, and market closes. If you speak to some of the stock market investors, they were wondering why the stock market is closed after 2 minutes, just after 2 minutes. So that is where a huge panic selling happens and where the S&P index falls below 5% and the market is closed. So the good question you ask, have I seen this before in my stock market experience? Yes, I have seen, right? So especially in 2006, 7, 8, when I was starting individual as a trainee investment advisor and advisor, we saw when bombs were also going on, right? When we get to know a bomb went on in Maradana or somewhere, at that very moment, stock market crashes down. And investors say, sell my stocks, sell my stocks, sell my stocks, right? So they sell. Then after 2-3 days, we see back again, the stock starts recovering, right? So in 2006, 2008, 2009, towards. We saw this situation happening. And Sri Lanka, when the war ended, the people who had invested in the value stocks made a thumping amount of money. Especially I could remember me and another friend of mine, a colleague of mine, we were very interested in the hotel sector. So his name is Viraj. Maybe if you're watching, you can put a comment as well. So we decided, let's buy Taj Hotel. And at that time, when we invested in Taj Hotel, you get 2 buffet tickets as well. You can go and have a nice buffet anywhere. So he also bought, me also bought, and few investors also bought. So we got Taj shares. So the Taj was trading around 9 rupees at that time. And after the war ended, this you can go and check later on, this share went to 80 rupees. So imagine the profit that a person can make. So when the market comes down, right, people without panicking, if they look into value counters, the proper valuations, the right counters at the right price, you can make a lot of money. Then we saw later on, when Saharan's attack came, Easter Sunday bomb attack happened, again the market crashed, but then it recovered again. Because this is a demand and supply theory. When value investors see these stocks at the right price, they start accumulating. Then COVID-19 impact happened when stock market was closed and people thought, my good, world is coming to end. Sri Lanka is going to finish. World is going to finish. But then we saw commercial bank dropping to 50 rupees. So the valuation of commercial bank we call net assets per share, that net assets per share was around 125. So what I did was, for several funds, they were asking what stock to buy, what stock to buy. At that moment, I thought, okay, let's get into commercial bank, net assets per share of 125, trading at 50, massive discount. So 125 to 50, we see a massive discount. So as value investors, we see, okay, the share is actual valuation is 125, 50, super price, let's get in. And you would see on 13th of May 2020, when the stock market opened after the COVID, if you like, you can go and see the figures as well, it traded at 50. And in January 2021, this share went to 110. So this particular client had made 3 billion rupees purchase and sold at 6 billion, a massive thumping amount of money they have made. So like this, there are ups and downs in the market. So you have to play the game very safely, looking at your risk and return. Especially these newcomers, they come and put all their money in the stock market, which I thoroughly disagree, which is a very bad thing to do. So how much you should invest in the stock market is you take your age, then you take the value number 100. So from the 100 you minus your age, you get a particular value. That particular amount, percentage only, you should invest in the stock market, not all of your money. Don't put all your eggs in one basket. Don't put all the money in the stock market. And also a lot of people, the youngsters, go and buy on credit, which also I say, don't do that, because when the market drops, your portfolio might get wiped off.
So what is the advice you would give for these investors?
Yes, very good question. So for us to start with, let's talk about, in our MasterMind YouTube channel also, we have spoken a lot about ratio calculations. But to recap, for those investors who is already invested, we can remind them. And also, if you're a newcomer to investing, this will be valuable. First ratio, look at net assets per share. Like I rightly said, if you are looking at a share of net assets per share 125, trading at 50, then that might be a good stock to invest. Then look at the PE ratio of these counters. So you have to match with the market PE. We saw the stock market in Sri Lanka. In the month of January, we saw a peak of around 13, 14 levels of market PE. So at that time, what we advise is to look at counters which are less than the market PE. So at this very moment when we are doing this video, the market PE has come to around 6, which is very low. And we are looking at counters below 6. Value counters is a good thing that you can invest, which I say as number 2, the PE ratio. The third ratio that I could explain is look at the dividend yield. When companies are performing very well and they're making profits, they will pay a high dividend yield. So there are counters which are paying you a very high dividend yield, even around 15-20%. But with interest rates, you might think, okay, at this moment interest is going around 25, might as well I put the money into the FDs and enjoy that benefit. But we should not forget the capital gain. So when you invest in the stock market, there are two types of gain. Number one is capital gains, where you buy a particular stock and sell it at a higher rate, where you get a capital gain, which I spoke about the Taj and Commercial Bank. Then the next one is dividend yield. So you can look at the dividends, how much you are getting, and make your investment. So if you're investing in the stock market, at least make sure you look into these ratios. There's another ratio that I could add as a bonus is the price to book value, where we see below 1 is always attractive. And we see at this very moment, stocks are running with 0.2 price to book value. It's a massive discount. As value investors, we will see this. But a newcomer will think, oh, stock market is dangerous. This time is not a time to invest in stock market, and they run. But you can mark my word, in 2 years, the person who will watch this video, they will wonder, Roshan told, it's a good time to buy stocks at value counters at this time, and they made money, and you will see so many comments. In addition, we have many videos done in the MasterMind YouTube channel. So anybody interested, they could watch these videos and learn more, because some people just make a call to me and say, I want to learn stock market, and 5 minutes I have to teach how to make money in the stock market. You can't do that, right? It's I have 18 years experience in the market. Some have 25 years experience. So in one phone call, we cannot teach you how to make money in the stock market. You have to watch all these videos. In addition, if you are interested further, we have our MasterMind Masterclass programs, training programs that we do. I think in the description, you will have all these details. You can just click and join our programs.
Okay. So thank you very much, Mr. Roshan, for your valuable insights and your valuable time provided for this conversation. And I hope you have learned most of it on how to invest in stock markets. So subscribe us and stay tuned for more videos.